Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker, Scott Kerschner, and Troy Kerschner. 419-794-3030. That's the phone number. 419-794-3030. ARHQ.com is the website. If you missed the first half of the show or previous editions of the show, you want to catch up. Available via podcast and on YouTube. Just search for America's Retirement Headquarters wherever you consume your media, and all the episodes and previous questions up there for you to digest at your own pace. Now, guys, I don't know if you knew this or not, but 2024, turns out it's actually an election year. I'm kidding, of course. We're all been inundated here. But given the volatility in the stock market that could happen leading up to November, there was an article in Kiplinger that suggests that financial risk reduction, well, it's a sound strategy. And that is especially true if you are in that retirement red zone, if you're within 10 years of retirement or perhaps even already retired. What are your thoughts? Do you agree? And how do we go about this risk reduction?
Well, I think what you talked about there is the time frame is the most important here, is when to focus on kind of the risk reduction category. So those people that are closer to or in retirement time. Troy, I know you're about the same age as my son Andrew, who also works here at the company. You know, he's investing in the 401k as you are. And I'd say, you know, for somebody who's young that has over, 10, 15, 20 years, or even longer till you need the money. What happens in the market this year is just noise, quite frankly. But, the difference is when somebody is already retired or somebody is just getting ready to retire, what happens in this election year can be a big deal. It can really have a big impact. It's because of what's called the sequence of returns. So one of the things in one of our most popular events that we do every year is called our Economic Summit. And we've got that event. It's coming up in March. We don't have the complete details right now. We're just finalizing our keynote speaker that's going to be at that event. But we'll be diving deep specifically into how to position your portfolio in an election year. But I would say if you step back and take a look at it, there's a lot of reasons that would indicate that the election year could be a positive year. In fact, I think it's roughly 8 out of 10 times if you go back and you look at since the S&P 500 has been around, an election year has been a positive year overall on the market. If we look at the month of January, it's been a positive month, and it's been a positive way to kick off the year. There's another old saying in our industry that says, as January goes, so does the year go. So there's a lot of things that could lead to positives, but then if you take a step back and you look at that, the markets are either at or close to all-time record highs. So what's the basic sound principle of investing? You buy low and you sell high. Mm-hmm. So if you've been riding the highs of the market over the past year, now could be a really good time to maybe protect some of your winnings. And that could be a strategy for a risk reduction and kind of a sound strategy. You want to be taking a look at determining when is the time that you're going to be needing the money. Money that's going to be needed right now if you're living off of your financial assets that you saved and accumulated, or if it's money that you're going to need in the next 3 to 5 years, you may not want to have that money exposed to market risk. This is the core philosophy behind what we've talked about with the independent income system. So within the independent income system, what we're doing is we're creating these different buckets of money that are designed for different time frames. And so even a retiree, they might have 10, 15-year, 20-year money like you have, Troy. That's their long-term growth part of the portfolio. And keeping that long-term perspective, the less relevant the short-term noise becomes of the market. But again, as the closer that you need that, the more important it is. The second thing that I would give as a tip for our listeners is be educated about what you own. You really need to understand the investments that you own. I ask that question when people call us up from the show or when people come into the office and get together with us, is I will ask, explain to me the methodology and the philosophy that's being used in your portfolio today to determine the investments that you own. Oftentimes people will look at me kind of like a deer in headlights.
Sure.
Because they just assume, well, that's somebody else's job. That's my financial advisor's job. And yes, a financial advisor's job is to help make smart investment decisions, but the people that are less educated about their investments are probably the people that are more likely to make poor investment decisions like chasing the hot investment when the market's doing good, and then ultimately selling out or abandoning ship when the market's going down. So, take some time, become educated about your investments and what you own. We not only offer the independent portfolio analysis, again, we have a lot of different events that are coming up. That Economic Summit is a very popular one. Number three, you want to know what your risks are and what your risk that you're comfortable with. With technology today, there's a lot of software that can help you develop an independent portfolio analysis and tell you, what your outcomes of your portfolio could be during various environments. So while the market's doing good, you want to look at that number now. You want to look at what that risk score is, because while things are going good, if the risk level is too high, you can make adjustments now before something bad happens. And the fourth tip I'm going to give on this category is understanding that short-term volatility can create a long-term opportunity. There's a great article if you want to read more on this. It's written by Warren Buffett. In fact, he wrote it in October of 2008. If you Google it, it's Buy American IM. And he talked about, in that time frame, the market in 2008 had suffered some major market declines. In fact, the worst wasn't even over yet. It got worse after that. The market didn't bottom out until March of 2009. But if you have in your portfolio and you have a predetermined game plan, take short-term volatility and use it to create long-term opportunities. So there can be many different reasons why you want to look at a risk reduction strategy for 2024 with the big election year, with the markets at an all-time high. And if you want to figure out, what is the right way to do that, give us a call. We'll be happy to walk you through an independent portfolio analysis, give you an outline of the ins and outs of how to position your portfolio to not only survive but thrive in 2024.
Nolan, one thing, we look at Troy and Andrew and young investors, they're working and they're building up their portfolios and that. As much as I hate to do this, next week I'm turning the big 6-2, right? So I am, that 10-year prior to retirement, that's me. Okay, this is real. This is me. And when I look and listen to some of these things that you go through here, I think about my situation, and I think back when, in a previous life when I had a 401k, I had no idea. I think you said number 3 was be educated about what you earn. I didn't know. I had no idea what I owned. That wasn't my job. My job was to do what I do with, insurance. It was the 401k financial advisor that signed us up for the 401k. That was his job to figure out. I had to pick and choose what my portfolio buckets were going to be. But beyond doing that, I didn't really know. And I got to believe that if you're in a 401k plan through your employer, and I know this is kind of off topic on a tangent kind of, but, the 59.5 and being able to do an in-service rollover of those funds, to me was incredible information, and I did not know about that. So like you said, these top 4 hit lists are very important, and I think knowing what you have is very, very important. And if you don't know what you have, reach out to someone like you or someone on our team to help you understand exactly what you have, because you could really, really benefit from that.
Especially as you get closer and closer to retirement, when you're in that red zone, you want to make sure that, you don't let volatility really jeopardize. In the same sort of way that, if you're on a flight, as you get closer and closer to your destination, any turbulence or anything that's going to cause delays, it's going to be tough to arrive on time. You don't want that to happen with your retirement. Have that independent portfolio analysis done to see, how to prevent market volatility or whatever may come down the line, whatever risk may come down the line from affecting those dates that you have in mind. It all starts with that phone call, 419-794-3030, or go into the website at arhq.com.